Starting from today's class, we are going to talk about consolidation. But before we talk about consolidation, I want to spend some time talking about business combination. Consolidation is what we do when business combination is established. So what is business combination and what are the different forms of business combination? And also the specific method we use in consolidation is called acquisition method. So we're going to spend some time talking about acquisition method as well in today's class. So business combination is actually very common in today's world. Some recent examples including AT&T acquired DirecTV at $47.4 billion, Google acquired Motorola, Microsoft acquired Skype, Facebook acquired WhatsApp. All of those are different examples of business combination. And in all of these situations, what happened is one firm obtains control over one or some other firms. So these kind of transactions are often referred to as business combination. And to give it a more specific definition, what is business combination? Business combination refers to a transaction or other event in which an acquirer obtains control over one or more business. So the keyword here is control. And what is control? So the definition of control is the direct or indirect ability to determine the direction of management and policies through ownership, contract, or otherwise. So as you can see here that a firm may obtain control through ownership, but it can also obtain control through some other methods like contract. And then special purpose entity is another example of controlling without ownership. So why do firms engage in business combination? This is a list of different reasons firms may engage in business combination. It can out of vertical integration to save cost for business expansion and so on and so forth. But ultimately, the firm just want to increase its firm value. So the ultimate purpose for business combination is to increase firm value. And business combination can actually take various forms. So there are 4 major forms of business combination: statutory merger, statutory consolidation, acquisition of more than 50% of the voting stock, and control through ownership of variable interest. So which is a contractual but not ownership control. Let me just briefly explain what are the differences among these four forms of business combination. So we have a firm A and a firm B. If A obtains control of B, so A acquires B, and as a result, B dissolves and A still exists. This is number 1. This is the statutory merger. However, if 2 firms, A and B, both of them go out and form another firm C, and both firm A and firm B dissolve, and the firm that is left is firm C. This is the second kind, which is statutory consolidation. And then for 3 and 4, the other 2 kinds, 3 and 4, firm A and firm B. A acquire B, so either acquire more than 50% of the voting stock of B, or obtain some variable interest, so obtain ownership through variable interest. In both of these situations, both firm A and firm B still exist after the acquisition. None of the firm or neither of the firm dissolve. So this is number 3 and number 4, the third and fourth form of business combination. So those are just briefly what are the differences among different form of business combination. And then this slide also explains, like, this is just a reiterate of what I just said. If there's only one surviving company, so if one of the original company continue to exist, That is statutory merger. Two firms A and B, A acquire B, B dissolve, A exists, A still exists. That is statutory merger. If companies transfer their asset or capital stock to a newly formed corporation, the original companies are dissolved. So both of the original companies dissolved and only the new company exists. That is statutory consolidation. If both companies survive, so both company A and company B survive. So A either acquire more than 50% of the voting stock of another company. A can go out to acquire 100% of company B, but in this situation, they may decide that both companies still exist. So A may be the parent, B is its subsidiary, even though A is only 100% of B, but they can like still decide like, I don't want B to dissolve. I want you to still exist. That's totally okay. So that's the third form, control exercised through variable interest. So this is just something A and B may sign some contract which enable A to have control over B, but this control doesn't need to be in the form of ownership. So ownership is the essence of ownership is some contract, right? So two firms can just sign some contract directly that can enable that control without having the ownership. So why do we need to know the forms of business combination? We just talked about there are 4 forms of business combinations. Why do we need to talk about those in our accounting class? Why do we need to know those 4 different forms? So the answer is because it affects the way we consolidate. As accountants, we care about how to do consolidation and the kind of business combination firms engage in that will affect the way we consolidate. That's why we need to know about it.